Well, the market is at extreme fear. And you know what they said, you always buy the dip on extreme fear. Is this time same old, we can still comfortably buy the dip in this market, or is this time a little different that we need to be watching out for? Together, we will take a closer look at the market, what is actually telling us to do, and what other opportunities we might be considering taking. Now, at the end of the month, obviously, you always look at your monthly close on the SPY. This is higher highs and higher lows. Long leg doji, beautiful setup, which is why I guess a lot of people jumped into the market just right before Friday close because they also saw the same thing. And by the time you see this video, you would have already known that crypto surged dramatically. And it wasn't by any weird chance. It actually happened because everybody was looking at this monthly close. That just places a lot of weight on how important this actually is. So Bitcoin closed out pretty good on the monthly because volume was low. And so as a result, on the weekend, the first and second day of the month, they just decided to jump in, bring the market up. Okay, so by the time of this recording, you can also see that the futures are up as well. So, you know, don't pay attention to what the street is telling you, but rather pay attention to what they're actually doing. This is very good monthly close, okay? Higher highs and higher lows. Don't be fooled by this volume because you have to believe a huge chunk of it was contributed by the buying pressure. And if we go over to the weekly, we obviously held up the low, right? This is not a correction. This is not a bear market. We closed above 20 weekly moving average. That is your mean reversion kind of benchmark. Even though the volume was high, but look at this. This is huge buying, okay? And this is still making us within this higher highs and higher lows. And if you go over to the daily, yeah, we are still getting back into this green area, the market bias. And the volume is also very nice. And look at this RSI, just huge tick up, right? Volume definitely outpaced the previous day on S&P. QQQ is not so much because we are in the red structure now and the volume is not there for us to see. And largely, I think that's because of NVIDIA earnings. Even though it was good, the market didn't like it. It's hard to please the market these days, but this is not as good as SPY. And also on monthly, the same old kind of, mind you, this was February, a shorter month, less trading days, and we were able to have this kind of volume and lower low. That's not as great. So if you are overly exposed in the technology sector at the moment, you might want to think about rebalancing your portfolio a little bit. Okay, and QQ not as good, but definitely not any cause for concern. Looking at the VIX, this is okay. So we held up the low. Okay, we made higher low, but lower high. 22.51 versus 22.4. That's not great. That's not bad. This is telling you the VIX doesn't know where it wants to go. Um, right now, with that being said, we are looking pretty bullish in the near term. That is this week. But just to keep in mind that we can still see some choppiness for the remaining of the month just because VIX is not crashing. And we don't like that. Okay? And Lrcx. This is my kind of favorite kind of setup, right? Higher highs and higher lows. And of course, we saw the name breaking above $90 per share. We talked about Lrcx on the channel numerous times. And of course, that is a huge profit taking zone. But the market was not able to bring it down any further. While we are in extreme fear, it should be going lower. It's not. So this is healthy. And this is telling you buyers are accumulating. There are not enough people trying to sell this name. Looking at the weekly, this is not good close, but we are still in the green. And this would be a very nice high risk reward kind of setup because we are getting down to a very desirable level. And this is your support around 73.56. And we kind of seems like, we are finding a little bit of support on this weekly moving average. Going over to the daily, well, that's like 7 red candles. You just don't see that for Lrcx. And definitely not after they reported a very strong result. Now, When we are on the way down, the kind of evidence you're looking for is not how many people are buying here, rather how many people are still selling. This is good sell from Nvidia effect. Of course, we knew that. But look at this long leg doji. This is telling you, oh man, they don't want to sell this name anymore. It cannot push it down higher. It cannot go up anymore. So we are waiting for the monthly close. And you got that now. This is looking pretty nice to me because this is not normal. And you have to believe some dead cat bounce or a new uptrend can be forming after this kind of sell. And ARM is presenting with a very similar kind of setup. While the monthly is not as good, but the volume is definitely going away. This is telling you at the beginning of January, we were very determined all the way from 125 to $182. From that point forward, it's very understandable that we can see some profit taking, but the profit taking is not enough. We are we have been trading above this $123 for quite a while now. If you're looking also at the weekly, volume is not great, but again, that is largely contributed by Nvidia earnings, so I wouldn't place too much weight on that kind of volume profile. And this is a very nice higher highs and higher lows, and this would be your stop loss. With this kind of risk reward, down there it's about $10 per share, but you can potentially make $25 per share or even more than that. And I also wanted to talk about MongoDB. I've been very happily trading this name up until now because right now it does not look very good. Okay, earnings, obviously they probably reported very, very bad earnings for the stock to drop the way it did. And usually, afterwards you would see some buying going into this name. And of course, we knew that in January the market was overall very healthy, very bullish, but it was not able to take it any further from there. So we give it some time. We give it another extra month to see if buyers are recommitted into this trade. Well, they did not. Higher highs and higher lows, but that's not how we want to read this chart because the volume is very bad. And this is a clear reject. Okay, looking at this is telling you that is serving as new resistance at $298. And until they can report an upbeat earnings, completely changing the narrative, I don't see this name going over to test that 298 again, just because the volume is also very bad. On the weekly, yeah, this is kind of like the neckline, if you're looking at this as a head and shoulder, as soon as we hit the hip neckline, we just had a drop down. Sure, this is pretty good buying at the end of the session, and that is because SPY actually went up for around 1.5% on Friday. This is just like a broad market kind of move. This is not telling you big buyers are coming back in. Yeah, good close, good volume. So if you want to play this name, make sure your stop needs to be where your stop needs to be. Okay, don't just because you're trying to justify your risk reward, you're putting your stop loss at a very weird level, which is not really justifiable. Your stop should be right here, or the previous neckline high, or even just slightly above 200 days moving average. And potentially you can make this on the way down to test this support again. Okay, again, your stop needs to be where your stop needs to be. Don't just if your risk reward is not there for you, don't even consider taking that trade. Carvana, this is my favorite kind of setup. Long leg doji, huge higher highs and higher lows with even lower volume. And if you go over to weekly, you can see that the broader market, most of the names were closing red on the week, but we did close on the green. And yeah, usually this is not any setup that I would take on the weekly chart, but the long thesis is justified by the monthly close. And we are obviously closing above 20 weekly moving average. And the last time we did this and this kind of setup, it didn't look like bullish at all, but it did go up from there. So that's why I would like to give it the benefit of doubt that even though weekly did not close the way we wanted it to, this this thing is not like 100% going down kind of setup for me. And on the daily, we are having higher volume than what it was before, and in the green area as well, finding this pretty nice support consolidating to the upside a little bit, and even the RSI is showing us higher highs and higher lows. Okay, this is also looking pretty good to me. Um, Service now. Service now has been going down for a long time. Is it about time to bounce? If we can close above 200 days moving average, that would be a very sweet zone that I would consider adding. And also two down on the monthly chart with lower volume. Even though, yes, February was shorter month, theoretically, normally we will have lower volume, of course, but this is wick to the both sides. That's something that I really like to trade. I would not trade it to all-time high. I don't think that's what happens, but I would definitely play some bounce. And yeah, if you're also looking at the weekly, we are finding some support above this 50 weekly moving average. Just also happens to be the previous consolidation liquidity zone. If we don't break this level, big chance that we will go over to the upside to test that 20 weekly moving average. Meta, definitely beautiful because we are seeing this monthly close. There you go again. Very, like, there's so many exciting opportunities that we're seeing in the market this week. Okay, but don't let your excitement kill you because we are not fully out of the woods. And this is clearly double bottom with clear, significant volume as well to show for it. Smaller time frame, you can very much easily see that this is double bottom. The last time we saw this kind of double bottom was with Oracle. You see, after that double bottom was forming, it just ran, right? And I believe CMG had a very similar setup as well, exactly double bottom going higher. Yeah, that being said, if you want to take a trade on CMG, I think it's also a very good trade as well. I will not go over to healthcare just because we talked about this a couple weeks ago. They have been performing extremely well. I think they will still continue to perform for the foreseeable future, at least for another couple of while. If you want me to take another deep dive into Amgen, AbbVie, Eli Lilly, those names, comment down below. I'll be very happy to. And that is your update for today. Once again, this is not any financial advice. You're trading on your own risk. Just make sure you do whatever feels comfortable and always be controlling your risk. And with that being said, I will check back with you before the end of the week. And until then, happy trading. Bye for now.